EXP family. My name is Alyssa Specht with EXP University, and welcome to Level Up. I am once again thrilled to be here with you today. Very exciting day. We've got an amazing session for you. Next up, we are talking to this amazing bunch here, Kevin and Lisa Cahill, and they're going to come in and reveal some powerful strategies that we probably all need to hear about how we can save thousands monthly. So we're talking about setting smart written goals. We're talking about strategic retirement plans. And we're talking about, we're just leveling up our financial gain. So let's do this and let's toss it over to Kevin and Lisa Cahill.
Hello, EXP Realty family. Welcome to Level Up. We are so glad to have you here with us. Today, we'll be discussing the financially savvy agent. My name is Kevin Cahill.
And my name is Lisa Cahill.
And we're going to share with you 5 strategies to help you earn more money and keep more of the money that you earn. Allow us to introduce ourselves. Again, I'm Kevin Cahill, and I'm a licensed broker with eXp Realty in Florida and Washington. I've been a real estate broker since 1999. I spent years as an owner, investor, and managing broker with Keller Williams Realty. I was an executive with Realty, where I served as the managing broker of multiple corporately owned Coldwell Banker residential real estate offices. I've recruited hundreds of real estate agents over the years and have coached thousands of agents to higher levels of productivity and profitability. My wife, Lisa, is a licensed CPA, a certified public accountant, and has been since 1993. She has spent decades advising corporations, small businesses, high net worth individuals and families on their tax and real estate matters, representing them before the Internal Revenue Service. She is a noted expert on business and tax efficiency. She has been interviewed and quoted in the print edition of the Wall Street Journal 3 different times over the years, commenting on tax and real estate matters. In 2012, Lisa got her Florida real estate license and joined me in the residential real estate industry. Shortly thereafter, we created our own real estate brokerage brand, and we grew that company to multiple offices across Florida and Washington. In March and April of 2023, we folded our entire operation into eXp Realty. A few years ago, we created a technology software company called Realty Funnels, which provides easy-to-use and affordable solutions to real estate agents and teams to help them improve their client attraction, their lead magnets, their funnels, their websites, their prospect and client databases, their nurture and conversion automations and follow-up, saving real estate agents thousands of dollars each month while helping them to earn more and keep more money, which is what we're here to talk with you about today, how to earn more and keep more money. So we bring a lot of real life experience to you today. So let's jump right in. Lisa, you ready?
Yes, I'm ready. Great.
So Lisa, let's talk about the 5 strategies. Strategy number 1, the power of smart written goals.
Yes, this is really important. We start with this, and I think a lot of people think that they know that they need to set goals and that it's really not that important, that they have their goals in mind and they're just in the back of their head. But really, to really accomplish at a high level, you really need to write your goals down, keep them where you can see them every day, and read over them several times a day. And it can't be something that's just vague and general, like I want to earn more money. That's not going to work. They have to be specific. They have to be measurable. They have to be achievable. They have to be relevant, and they have to be time specific. That's very, very important. And the reason it's important is because in your brain, you have what is called a reticular activation system. This causes you to notice things to help you accomplish your goals. For instance, you might notice a really beautiful car, and eventually that car, you'll start seeing it over and over again. That is how your brain works. You have so much information thrown at you every day, And your brain has to filter most of it out in order to accomplish anything because there's just so much. So that's why it's so very, very important to keep your goals written down in this specific, measurable, achievable, relevant, and time-specific manner so that your brain can look for opportunities for you to reach your goals. And Kevin has a great example of one of the agents that he coaches on how he achieved his goals just exactly like this.
Well, I think it's really important. What you say about a SMART goal, many of us have heard about SMART goals. We've been to different types of training events where they talk about a SMART goal. But really the question is, have you committed to having a SMART goal? Have you written it down? Can you look at it many times throughout the day? Does your family know what this is all about? Are they aware of what your goals are? Do your friends and your extended family know what you're working on? I had an agent that I was coaching from 2009 to 2011, and he was really committed to having great success. And what he did was he wrote down exactly his goals. And he did that with my help. We got together one day and we spent about 3 hours in my office. I had a flip chart and we were working on different notions of what he was trying to accomplish. At that time, he was about 3 years into the business and he was already doing fine. He was not struggling, but he knew he was capable of so much more. And he really wanted to push. And he was a college basketball player, so he was a bit competitive and he was really committed to achieving his goals. So over the course of that 2 or 3 hour get together, we wrote down exactly what he was wanting to achieve in terms of financial, in terms of physical, in terms of relational, in terms of spiritual. And in terms of his business, we had all of that diluted down to one flip chart page. And at the end of that meeting, I tore it off and gave it to him. That chart had precisely how much money he hoped to earn 12 months from now. It said we worked backwards from that goal and we were able to figure out, well, if you want to earn that much money, you're going to have to take a look at the average sale price in your local market area. We did that. And we figured out what the average commission was in the local market area and determined what the average gross commission income would be from each transaction. Then we looked at his company dollar versus his net income, what he would be able to take home. So we built everything backwards from what he was hoping to achieve financially, and we broke it down into number of transactions he would need to close. How many of those would be sellers, which is his focus and which I think is the wise way to focus and build your business. Seller focused is always much more efficient and scalable than buyer focused. And then we also broke down how many people he would need to have in his database in order for him to have so many of those people have a real estate need and for so many of those people to then choose to work with him. And we worked on all of this stuff backwards and built out an entire plan. 12 months later, actually it was more like 11 months later, he reported to me, and we were keeping track of this throughout the year, but by 11 months, he had achieved what he thought was a bit outrageous, a goal that he thought was a bit beyond reach. He actually accomplished it in just 11 months.
It's amazing. And that's exactly how it works. You have to be detailed and specific and have it time specific, and it has to be measurable and relevant. And that's exactly how everybody has done this that has achieved at high levels.
Well, what's interesting about it too is it's specific. It's not like I want to earn more money. It's I want to earn this much money. Mm-hmm. It's measurable. Okay, how many transactions will you need to close in order for that specific number to actually show up? It needs to be achievable, meaning if you're starting off at brand new, your goal is not to earn $1 million in the next 12 months. Not that that's not achievable, it is, but you want it to be achievable for you and realistic and such that you're not going to lose faith in your own goals.
Exactly.
It needs to be relevant to what you're trying to accomplish with your own life, with who you are as a human being. What are you going to do with the success that you have? And time specific. I will achieve this by this time of the year. I'll have this accomplished by 5 p.m. on December 31st of this year. Whatever that might be, you need to have all of these factors in place. And then powers just come into play and start to make things happen for you. So really, savvy goals, smart written goals are the start. And yet we also have savvy accounting. It's not enough that you have your goals and you achieve. The real question is, you've achieved, how much were you able to keep?
Exactly. So it's really important, as Benjamin Franklin says, beware of the little expenses, because a small leak can sink a huge, great ship. So what we recommend doing, and what we do, is we track absolutely every dollar in and out. And we use QuickBooks. Mm-hmm. And it works extremely well. It's very easy to use. And this is how we track how much income we have and what our expenses are in detail. Mm-hmm. And we hold every dollar accountable.
Well, we have a chart of accounts, and we have a lot of different resources that we can make available to you. If you visit kevincahill.org, you'll see agent resources, and you can visit that and get a lot of additional information that we're sharing here. But what's important about this chart of accounts and having a profit and loss statement is you can visit with your money every week, every month, every quarter. And we would highly advise you to do that. You're a small business owner. And so it's really important for you to treat this as a real business. You can't let your expenses get out of control. You can't let things go unnoticed for 3 or 4 months before you realize, wow, that advertising spend is a complete waste of money.
Yeah, I didn't earn anything, or I didn't earn enough. And little things add up. You keep paying for this item and that item, and you just keep paying and paying. But then when you review your expenses, these print ads, wow, I don't think I got any listings from that.
I had a bus bench ad and never earned a dime off of that.
Yeah, and it's always a good idea, when you do get a piece of business, ask where it came from. Where did you hear about me?
Exactly.
And that's just, the more information you can have, the better off you're going to be.
Well, you want to make certain that you hold every expense accountable to deliver a positive return. You want your advertising to be attributable to the actual transactions that you are having. And like Lisa said a moment ago, when somebody reaches out to you and says, hey, I want to work with you, I want to talk with you about selling my home, I always say something along the lines of, I'm so thankful for this opportunity. Do you mind if I ask, how was it that you happened to call on me? And that way I know where that business came from. Was it a print ad? Was it something online? Did they visit one of my open houses in the past? Did they drive by one of my lawn signs? What was it that prompted them to call me? And then I can look at my expenses and I can look at my income and see the relationships.
Exactly. And having your expenses in an order and in a profit and loss statement helps us with our next point.
Exactly. So having the right people around you is mission critical to keeping more of the money that you earn, so that you are achieving even greater levels of profitability with your productivity.
So when you have all your expenses categorized in a great detail, then we recommend that you meet with your tax advisor prior to tax season. Like when I was in the CPA firm, we did a lot of tax planning in October and November, December. And we would plan for our doctor groups and our dentists and our lawyer groups, and we would plan how much they had earned and what their expenses were. And if there was anything that they could do to minimize the tax liability that they would have. So we would look at their accounting and we would determine if they had met the safe harbor limits.
So talk about what the safe harbor limits are. I think a lot of people might not necessarily know what that means.
Yeah, they just do it. So if you earn an income, you have to pay into the IRS quarterly. So if you earn less than $150,000 a year, you would pay in 100% of your prior year's tax quarterly. If you earn above $150,000, you would have to pay in 110% quarterly of the prior year's income. That's what we call, that's your safe harbor. That means you're safe from penalties. So not only have mortgage interest rates gone up, but the interest rates for the IRS have gone up too. So you want to make sure that you review with your tax advisor before the end of the year. Have you paid in enough? And have you met these safe harbor limits? And also a good conversation to have with them is, how much do I need to set aside from each commission check to cover my taxes and my savings? And we'll get to that, the next item. And also, I always believe it's better to be proactive than reactive.
Well, what's really important about being proactive is that there are things that you can do during the tax year to help your tax efficiency strategy.
Yeah, once December 31st hits, it's too late. And there's all kinds of things that happen each year with the tax code. There's new tax credits and new tax incentives, and you wouldn't necessarily know about them if you hadn't spoken to your tax advisor ahead of time. And you need to have time to implement something that might save you money in the future. And that leads us to our next slide.
And before we get into the next slide, I just want to share one other notion.
Okay.
We had talked about QuickBooks. We had talked about a chart of accounts. What's really important about this is that you're walking into that conversation with your accountant in a way that is amazingly efficient. They're able to look at 1 or 2 page document, your profit and loss statement, and very quickly help you determine some appropriate strategies for even greater efficiency. If you don't have some type of tax accounting software, then you might be walking in with a box of receipts, and that is not going to help your accountant efficiently advise you on strategies. So you really owe it to yourself as a small business owner, and as real estate agents, we are all small business owners. We want to get the very best guidance and counsel that we can from our advisors. And when you're walking in with a QuickBooks account with your printout of your profit and loss statement, you are able to very quickly get into some wonderful conversations that you just wouldn't be able to have if you're not using a system.
And one more thing I might add, keep your receipts, keep them for around 7 years, and track your mileage, track all these things that are important. And when you're keeping your receipts, QuickBooks actually has an element to it where you can put receipts inside of there. Then they're all in there in the same place. You can describe in the memo what this expense was for, what was the business purpose, especially important with meals. When you're meeting with someone, why are you meeting with them? Who are you meeting with at the time? What's the business purpose? What's the date?
If you're going to a convention,
Yes.
if you're going to some type of training, you not only have the cost of the event or the convention or the training, but you might also have hotel expenses, you might have travel expenses, you might have meals while you're traveling. All of these are possibly completely legitimate write-offs that you need to be taking full advantage of, and yet you need to have a system where you're not just sort of looking back and guessing and thinking and throwing some phony number there. You need to have exact numbers so that you're audit proof and you're taking full advantage of every benefit available to you.
Yes, not having them in QuickBooks or some accounting program, they just slip through the cracks. If you're trying to compile it in a hurry, you might be busy at tax season, who knows? That is being reactive. And then you're trying to gather as much as you can. And many real estate agents are not taking full advantage of the tax code with deducting everything that they can.
One notion that I have, an analogy that might be helpful for you to think about in terms of tax efficiency, is you have to pay all the tax that you have to pay, but you're also allowed to use whatever lawful strategies exist to either avoid or defer tax. So this simple analogy is, if you cross a toll bridge to get over a river, you must pay that toll. However, there is nothing illegal about you driving up the road a little further and crossing a bridge with no toll. That is the same kind of notion of tax strategies. Are you doing things in the most tax efficient way so that you are looking at greater productivity and profitability from your real estate business?
And another overlooked deduction is Kevin and I are standing in our home office. When you're when you're a real estate professional, you most likely have an office at home that you use for business purposes. Be sure to talk with your accountant about how you can use that as a deduction if you're using it in a proper way. And also be sure to track your mileage and have a mileage log. QuickBooks will also do this for you. And if you don't have QuickBooks or you have a different software, there's something called Mile IQ that will also track mileage. That's very important to have your mileage documented for business.
You just want to take advantage of every possible write-off that is lawful so that you can pay the right amount of tax and not a dime more than is needed.
Exactly.
So let's continue. So much that we could talk about, by the way.
Right.
I mean, we could talk about any one of these 5 strategies for easily an hour each, but we've got just these 5 that we're going to share with you in an overview so you really have some good thoughts that can start to work into your business model. So Lisa, number 4, set up a retirement plan. Have a savvy plan for your own retirement.
Yes, we have set a SEP IRA up for us, and we did that about 10 years ago. And a SEP IRA is allowing you to put away more money than a regular IRA. And also I want to mention that a regular IRA is subject to phase out limits. If you make too much money, you can't contribute to it, or you're not supposed to.
Whether that be a traditional or a Roth IRA,
yeah.
There are certain limits, whereas a SEP IRA is highly beneficial for independent contractor types.
Yes, like us, we have our own small business, and it allows us to put more money away than a traditional IRA or a Roth, and it helps us save tax money. So over the last 10 years, Kevin and I have saved tens of thousands of dollars in tax, and we have a pretty good sized savings now. And it just sits over there in its SEP account, and it grows without us having to pay tax on the income inside of it. So that is another excellent thing. While you're with your tax advisor, talk about what retirement vehicle is best for you and how much you should set aside and save for it. And also consider getting an umbrella policy too.
Well, let's talk about that. So a couple of notions here that I want to make sure we're talking about. An umbrella policy is a form of an insurance policy that protects you from liability, protects your assets, and it just sort of covers, like an umbrella, your entire business operations. So we're real estate agents like you, and if we ever have somebody in a car with us and we get into a car accident, God forbid that should ever happen, and it never has, and thank goodness, but if anything should happen, we don't want to be exposed to even greater liability and risk. That umbrella policy covers us. It covers us in terms of any of our business dealings, so that if anybody should get hurt at an open house, if anything should happen to the house at an open house, we are covered because of that umbrella policy. And it's amazingly affordable.
It really doesn't cost that much. It's far, far worth it.
It's smart. You should just talk with your homeowner's insurance advisor about an umbrella policy for your business. Now, I know that you talked about setting aside money from paycheck for taxes and savings. Let's talk a bit more about that, because I think it's something that's sadly overlooked all too often in the residential real estate space.
Well, we have a great story about one of our new agents. In his first year in the business, he earned $240,000.
And in his second 12 months, he earned $374,000.
So he had, based on his $240,000 a year, he was paying his quarterly estimated tax. He had an accountant that he had been going to. So then the next year it was quite an increase to $374,000. So when his taxes were prepared, he called us and he said, wow, I owe $70,000 above and beyond what I've already paid. So I asked him, I said, we had talked about you getting a SEP IRA. Did you ever do that? And he said, no, I haven't done that. I didn't think I qualified for it. And I said, I'm sure you probably do. Really find out, call Vanguard, find out. And sure enough, he did qualify. So the accountant redid his tax return using the maximum SEP IRA contribution allowed, and his tax bill went down over $30,000.
Over $30,000 that he was able to save. And that's where you often would talk about.
Yeah, we talk about at our accounting firm, you know, you can either write a check to the government or you can write a check to yourself. So really think about funding these retirement plans, because it will really save you a lot in tax, and it'll allow you to grow money. That's unbelievable amount of money you can grow.
And it's smart. You know, you're in this business to build for your future, for your family, to create a legacy. And if you're smart, you can be doing all the right things every year, and amazing things will start to happen. The power of compound interest, it's like the eighth wonder of the world.
Absolutely.
Let's continue. So let's talk about savvy timing, paying bills and receiving income strategically. Now, this is something that you would talk about with your various practices who had you as their accountant.
Yes, we would advise, if you can swing it, prepay any bills that you are going to be paying in January or early January anyway. Go ahead and pay them in December. At the end of December, then that way that reduces your tax bill for that year. And also, while you're talking to the accountant, when you're learning about all these tax incentives and things, you might consider, if you're considering buying a new car or a new computer or a new printer or anything business related, you might consider buying those big ticket things in December. Then that helps you with your taxes. And also, when you're considering buying a car, always run it by your tax professional, because there are certain kinds of cars that get you a bigger deduction in your taxes. So be sure you buy the right kind of car.
That is in the IRS code, that is called Section 179.
Yeah, and I'm a CPA, but I'm not your CPA. So everybody's situation is different. So it's really best to talk with your tax advisor about your specific situation. And yes, when you're keeping records, you always keep your big ticket items listed separately in your record keeping, because it's a tax code. It's called Section 179, and that's a different treatment. It is a direct write-off of a fixed asset, which is a big ticket item like vehicles and different things like that.
Well, computers.
And computers and laptops.
Printers.
And office equipment, desk,
furniture, computers,
anything
cameras, all sorts of things.
Sure. Cell phone, all that.
And one of the stories I'd love to share is how we had a wonderful business year, and we were concerned about having so much income. And it was late November, early December. We were looking at ways that we could strategically shrink our income by having more expenses. And so we had an advertising campaign that was running in a local magazine, and it was a wonderful magazine campaign. We were seeing a 17x return on that investment. So every month we were spending somewhere in the neighborhood of about $1,100 on that print advertising, and it was delivering us easily somewhere in the neighborhood of about $20,000 a month of return on investment. We loved this ad campaign, and we were very thankful for that magazine and for that publisher. So early December, I call up the publisher of that magazine, and I first off thanked him for all the great work that he had done for us over the prior 6 months. We still had 6 months of a contract with him for that advertising. And I asked him, would you be comfortable if I were to pay off the remainder of that 6-month contract right now for a discounted amount? Would you extend me a courtesy if I were able to write you a check today for that full remainder of ad spend? Well, this was a win-win. He, first off, appreciated that we loved marketing with him and advertising, and we were going to continue to advertise with him. He was also very thankful to have a flush of additional cash flow in December. He was happy to extend us a very nice discount on that additional ad spend. So we were able to increase in sort of drag future expenses into the current tax year, get a discount on money that we were fully planning on spending anyway, and he was getting cash flow in December. It was a win-win.
Oh, it's great because we save money on tax, we save money on the product to begin with. So it was just really, really good for us. And we recommend doing that anytime that you can. And also, if you have any way you can do this, if you can have any control over when you receive income, if a deal can close January 2nd instead of December 30th.
So you might have a home seller who gets an offer on their property. Let's just say not necessarily a home seller, but let's say an investor who will have a capital gain ramification from that transaction. He may want to close in December for tax purposes. He may be better off closing in January for tax purposes. If you recommend that he talk to his financial advisor about this, it might help that seller strategically with tax. They might have sold stock. They might have sold a business. They might have a certain income where with additional capital gain, it will change their tax bracket this year, whereas next year, it might not necessarily hurt their tax bracket.
Yeah.
So there are some strategic things that property seller may be able to benefit from thinking.
Most of the time it does help. It'll help you and it'll help them most of the time.
So you're not always able to control this, but if ever you can control receiving income on January 2nd versus receiving it on December 30th, that will probably help you. So you want to drag future expenses into the current tax year and push income into the next year whenever possible, because then you're going to have 15 months before you're having to pay tax on that income earned in January versus income earned in December. You're going to be paying tax on that in 4.5 months, 3.5 months, really.
Absolutely.
And then also we talk about shopping around and comparing expenses. Talk about that ever so briefly.
Yeah, at the end of the year is a good time for you to review your accounting and all your expenses. And if you compare 1 year, the current year you're in, to the prior year, and you notice that certain things have gone up, it's a great time to shop things around. I know the biggest one for us is always insurance.
Homeowners insurance.
And auto insurance.
Auto insurance.
So it just renews, and then you say, this has gone up. We have a great insurance agent where we ask them, hey, can you shop this around? And they do, and usually
we save some money.
Yeah, it usually saves money. And
same thing for cell phone bills, any of those bills that you pay routinely.
Software.
Yes.
Make sure that you really need all the software you're paying for.
All those subscriptions, and then you'll see that there's considerable savings to be had. I think we've covered a lot already. Anything else that you want to be sure that we mention?
I think that's it. Just the software. That's a big one for real estate agents.
Yeah, subscription, software, advertising expenses. They really want to shop that around and make sure they're making great return on those investments. Well, we love to provide some additional resources to you. You're welcome to visit kevincahill.org to learn more about us and what we do and how we can help real estate agents. And you can watch more of our videos by going to youtube.kevincahill.org. We're so thankful for this opportunity to join you on Level Up. We look forward to seeing you next time. Thank you so much for joining us today.
And goodbye for now.
Kevin and Lisa, thank you so much for coming on the show. That was amazing. So my friends, show some love in the chat for that. That was awesome.